So,
Okay.
welcome back, everybody. Another episode with Real Talk with JT. I got someone special, someone who has been in the real estate industry probably for as long as I was. A good friend of mine for many, many years, brother from another mother, Sami Kabir with Guidance Residential. Yes, he is a mortgage banker, but he does financing differently, right? Let's put it that way.
You got it. You got it.
Semi,
Going back, going back. I don't know how long you've been in this industry, but I joined the housing industry back in 2002. Did you also start back in 2002?
oh 04, oh
Oh,
04,
four.
oh
Okay.
04. Yeah,
Yeah.
you remember those days, right?
Yeah.
2002, 2004.
Yeah. I do remember that. Listen, glad to be here at your show. It's always a pleasure. I think we did some events together back in at your office in Bayside
Yeah, I
back
think it
in
was.
2015 or so,
Yeah.
something like
It's
that.
time flies.
Yeah, time flies. But here we are again. So it's always good seeing you, John.
We are back live.
Yeah, yeah.
Always
So
good seeing you, and thank you so much for being here. Now, Semi, I know a lot has changed, since 2002, 2004, 2008. I remember, back in the days, the mortgage bankers, you guys didn't even need to be licensed. Like, right. Remember those days when
I
you're like,
remember those
holy
days.
smoke, we got to get licensed now, right? And I think after
Yeah.
the '08, like, half of the bankers couldn't pass the exam. So, like, there was good news, right, for some bankers.
Yeah, you're right. Funny, funny you mentioned this. My NMLS ID is 19212, the shortest, right? And I did not want to continue, and my intention, was to get out of the regular banking industry because it's riba and all that. As Muslims, and all Abrahamic faith tells you don't get into interest, right? Usury. I talk about a lot on my social media post. But at that's when I realized, before the meltdown, before the subprime meltdown, I realized, and I stopped my work, and I actually abandoned my MLO license.
Hmm.
Back then, they were saying you just can be grandfather. You don't have to take the exam. You just can do your fingerprinting and submit your docs, and you'll be good. I remember Mr. Chang was at the banking department back then in New York, and he used to call me every 2 3 weeks. Hey, Sammy, I need this document from you. I was like, Mr. Chang, I told you I'm not interested. Just abandon my application. I'm done. I just don't want to do it. Funny enough, later when I joined Guidance back in 2011, and they picked up the same NMLS ID that they assigned me, and here you go. I still have that. Yeah, we're uh, coming a long way. With this NMLS. Now the ID keep getting bigger and bigger. You can't
Yeah.
even memorize that ID anymore.
Yeah, it's a lot has changed, right? Now I know you said 2011 you joined with Guidance, but I would like to go back. So you said '02 you joined the banking, right? You start working for a bank. What have you done before, and how did you get into the banking back in '02?
All right. So, real quick, right? So, I joined as a realtor. My first broker, you would know, Paul Luciano,
Of
Ethiopia Real Estate.
course, Paul in Astoria,
Yeah,
absolutely.
yeah. He's a Northern Boulevard and 160s or 70s. So I joined, and he told me that, okay, great. Here's a book. Start making phone calls and ask everybody, do they want to sell their home? So that's it. I had no script. So I start calling, and they were hanging up. Some of the calls were going unanswered. And one guy picks up, he said that, can you stop calling me? And he just hung up the phone. Another guy cursed me. So then I asked back then, and Angela Nagliari, she used to work with Paul. And I asked her, what do you do? And she said, here's the script that I use, you can use. Long story short, I got my first listing, right? Within what, 3 months. And
From making calls.
making calls. I was making calls. And the funny thing is the seller was going through divorce, and he said, come and meet me at the sidetrack, sidetrack in Sunnyside.
Yeah.
I went there with the listing documents and everything. He didn't sign over there, but we spoke and everything. And then he said, come back later. He signed the listing agreement. I got it. And so fast forward, I found out that real estate is not for me. Why? Because I was calling a seller. I had his address up on my screen. I was making phone calls. I was setting up the appointment. My colleague behind me saw what I was doing on my screen. At that time, I was not with Paul Luciano. I was at Prudential Douglas Elliman, right? Because I wanted some training. I wanted to know.
You wanted to be with a big brand, the luxury real estate, right?
I was lacking that training. Training is so important. Somebody comes in for the first time, you don't know, right? You want to know. And I was so hungry for knowledge. How do you do it? So I joined Prudential Douglas Elliman, and they sent me for training. After that, I was doing my daily stuff, and I set up the appointment for a listing appointment. I go walk in, I park my car, I'm walking in, I see my colleague walking out of the door. And I just added 1 plus 1, So I understood what happened. I did not end up getting the listing because my colleague just picked up the listing. So things like this discouraged me from doing real estate. I said, you know what? I'm always been a number guy. Let me see. And my friend influenced me who was in the mortgage. He said, come on, you are a great number guy. You're going to enjoy it. I looked into it and I said, you know what? Why not? So I started mortgage right after about 15 or 16 months of doing real estate. I did bring a lot of listings and I did good amount of closing,
Are
several
you are you,
great
are you
deals.
thinking of going back? Maybe you could be the top listing agent now.
No, no, I wouldn't
If you're
because
missing the hang-ups and the FUs on the phone.
no, I wouldn't. I would not, mainly because where I am right now, in my career and what I enjoy doing the most. Obviously, I don't produce anymore. I also have done my fair share of originations as a loan officer, as a MLO. But right now, my goal is to develop the region for the company that I'm working for. I have 4 states under my supervision. There's so much opportunity right now to grow the market, and there are a lot of the community members don't know the program that we offer, and how they can become a homeowner. I find it very, beneficial for me. It keeps me going, keeps me motivated every single day. So I found something that I really enjoy
Yeah, and it's tough to find something which you really enjoy and pays well at the same time, right? Like,
at
and
the
you
same.
got it. So you got to hold it. I love that. So O2, you got into real estate, right? 15 months into it, you said, you know what, maybe this is not the best thing for me. Let me try mortgages. And you probably had some experiences with mortgages doing real estate as well. And you were like, hey, 1 plus 1 is 2. I can probably do this. You don't need a license, right? Back in '04. Sign me up. Now, which bank did you start up with, and what was the experience like, and how long did you stay them with?
Well, I was introduced to nationwide
Mm.
capital funding. That was the name. And to be honest with you, I was walking every day with file, trying to get find a home for the mortgage, right?
Mm,
And not knowing how the processors are working. I'm talking about back in the day, things have changed so much,
completely.
so completely changed. So I worked for a few months and I realized that, there are a lot to be fixed. Processors are not paying attention. The underwriter's attention is almost you. You can actually get hold of the mayor of your city easier than getting hold of the underwriters, right? And you're trying to close a deal.
Mm.
So I saw that there was something wrong with that picture. So I started my own. Uh, uh, I actually named it almost the same uh, nationwide capital funding, uh, and then became a correspondent lender 2004. Had about over 107 or something loan officers. Back then it was, if you can bring another loan officer, bring a deal and that kind of a thing. So I had a lot of loan officers and I was closing deals back in the days, 2004, you are, if you can do 5% down, 3% down, somebody with a work authorization, somebody with bankruptcy, and here you are, you close one deal, four other guys comes to you and they tell you, you closed XYZ, you gotta help. So all of a sudden I'm closing deals and there's this one particular deal that came to me. I closed, and a good friend of mine who actually inspired me and told me to get into mortgage, he couldn't close. So he calls me. He said, "How did you do that? How did you close that deal?" I said, "Well, I have, you're talking about doing a wholesale, right? So you're a mortgage broker, licensed mortgage broker, and here you are. You have these 60, 70 bankers who are sitting there, they want a deal from you." So I told him that, it's not how I did it, it's who you know, who can close a deal for you.
Mm.
Then later on, I actually joined hands with my friend 2005, and I continued on doing wholesale. So Olympic Mortgage is the company that I deal a wholesale. I think back then we crossed path doing deals. So that was my story. Olympic Mortgage was the last company that I actually worked with as a vice president of sales. Had 30 loan officers that I was managing in our. We had two locations, Woodside and Jamaica. So we did quite a lot. We were very well known in the community. Those are all old stories now.
And I think back in the days, it was more community niche base, right? It was
Yeah.
like, that's the local guy, you know what I mean? Like, you go to him. It wasn't like go online and Rocket Mortgage and you got 25 different options, right? It was more, location specific for the
Yeah.
business, right?
Very, very much. Jamaica and Queens, and you're so busy. Like we would have 7, 8, 10 loan officers. All of them are getting businesses closing right in the same area, Jamaica. But then again, there are 10 other mortgage brokers are in the same area,
On
right?
the same block.
Exactly. So, uh, you know, um, business is still there, but you just have to be out there in the
Uh,
field,
And I
stand up.
mean, and Semi, that this, what you just said, it's pretty exceptional, right? Because in '02 you joined real estate, you did it for about 15 months or so, right? And then in '04, '03, '04, you went into mortgages, and within like a year or something, you had 100 plus loan officers working with you, right? So you didn't go in like, let me test it out, let me do a few loans, let me figure it out if this is something for me. You were like, this is what I want, and I'm going like all in on that. Like, where did you get so much confidence to accomplish so much in such a short period of time?
To be honest with you, prior to 2002, I was in the corporate environment.
Mm-hmm.
Everything was very structured, and I saw back, housing industry has come a long way, by the way, right?
Mm-hmm.
Right now, you log into an MLS one key, you see the improvements they have done and all that trainings and all that. I saw that there was a need, um, a lot of improvements, and I knew that I could do a lot. I could offer a lot, and at the same time, I had a goal in mind. I wanted to get somewhere. I i wanted to make a lot of money, first of all, right? Second, I wanted to build something. That's something that I always have. That's in my nature. If I want something, I bad enough, and I will go for it. And day in and day out, it's not that easy. It's just pixie dust, and that things appeared. A lot of hard work had to be done. A lot of yes and no's.
Mm-hmm.
A lot of doors were shut just to be able to do what I wanted to do. But yeah, you know, look, success is not easy. You just have to work for it. Um, Also, doing real estate, I think I fell into one of those categories that you guys always talk about. 80% of realtors quit within the first 18 months. So I was one of those. I quit. I just couldn't survive, right?
Well, you did pretty well. I mean, in the first year doing about 15 listings, that's it's actually pretty good production, right? Like a lot of agents, they don't have that production now, but I think early on you recognize that even though the money is good and there's a potential, it just wasn't clicking for you. And I
Yeah,
think, like you said, your skill, you realize that it could be applied somewhere else better,
yeah.
right? Which was mortgages. So I know you mentioned structure, and I agree with you 100%. Like, what do you do in your day to keep yourself structured? Like, do you use maybe calendar? Do you use some apps? Do you have a little notebook when you write down your to-dos? Like, how do you keep yourself structured and organized?
Well, before iPhone, right? Notes, all that. I used to use something called One. What is it called? One Note, or the elephant logo. It's green logo.
Mm-hmm.
I forgot that name of the app. That's what I used to use. It was all across the board. It syncs with your computer, with your phone or laptop, or work or home. I used to use that a lot. That's just one way of staying in focus, that you don't have to feel that, oh, I gotta go home, I gotta go to my office to get restructured, reconnected again to what I was doing, right? So you could be very mobile. I My personality is process driven. That's how I always have been. Everybody's personality is not the
A
same,
little different,
but
yeah.
it doesn't mean that one is better than the other. It's how you communicate. It's your communication. It's your comfort level where you are. um you know I am high S and high C, if you know what I'm talking about, the
Mm-hmm.
disc
This
personality.
profile, yep.
Yeah. So that's what I fall in, right? So I'm very comfortable at that. So I will spend my time in setting up a process and schedule and then execute. And the results is something that's gonna get me motivated more. So result oriented. So I want
Mm.
to see results. So that's how I operate every single day. So it's like second nature. I have to get something done. I need to speak to the team. I need to speak to the community. I need to do something for the community. I'll execute. I'll have a plan laid out
Hmm.
and execute, pretty much.
I love that. And you know what? I really like how you said that you know your strength and you're also aware of your weaknesses, and you simply just play to your strength,
Yeah.
right? Now, I know you said C and S, and I kind of agree with you on that. I see a lot of these C's, especially the analytical people. And by the way, all the greatest CEOs, they're analytical, right? Like they are C's. They're not D's. They're not I's,
They're
right?
these,
They
yeah.
they C's. You know what I mean? Like they need to have the process done. Elon Musk, Bill Gates. I mean, all these guys they C's, right? But I also know the C's they have a lot of the analysis paralysis, where you want to do things, but you tend to overanalyze and overthink stuff. Like, how do you keep yourself moving when you get to the point of overanalyzing stuff?
You actually need to sit back and sit back and zoom out. See,
Mhm.
a lot of those folks who are high C's and they get lost, they're very low in D, very low in D, because they're not able to make a decision. You have to pull the plug. That's where they get stuck. Luckily, I don't have that problem. I do find myself in it, and when I do, I right away use process of elimination. So something that you can use, something
Mm.
it works for me, I will right away use process of elimination to help me make a decision on the spot. So I stop analyzing enough, look back, and then you make your call.
So can you walk us through like what the process of elimination looks like for you? Like, how do you analyze that thing? If it's, do you put it into appropriate bucket and then you decide
Yeah,
when it gets done, or how does that
yeah.
work?
There are I I can't think of an example right now, but process of elimination, you want to see that, okay, let's say somebody, um, you know, let's talk about a file, right? It's easier than
Hmm.
talking anything else. When you look at a file, your goal is to close the deal, right? You
Yeah.
want to close the deal. So when you want to close a deal, how do you get there? And it's a process. You actually want to make sure that it's smooth. The process has to be smooth for the customer, for the realtor, for everybody involved. So you look at the obstacles, and when you see the obstacles, you look for the solutions, and you put each solution and obstacle in each bucket. And then you see, for example, let's talk about what is the challenges that we see majority of the time closing a deal is the money part, right? The asset. Customers don't have their money in their account,
So the DTI, you know what I mean? The DTI just went
right?
off, something like
Um,
that.
exactly. And then why the DTI went up? Because, oh, the title bill just came,
Mhm.
and right now it's towards the end of the year. It's Q4. So obviously the title companies right now, they're going to be looking at the 2024 taxes. School tax went up. But
Mhm.
hey, $1,200 school tax just went up. Now the DTI, now we have to rerun the numbers. Now you have to, now you're short of assets, right? Now gifts and stuff like that. Mr. Customer, I don't think you have four cousins all of a sudden showed up just to give you a gift, right? Right? So you need to look into all these possibilities, and you have to be able to see them. All right. And how do you handle these scenarios? So are you going to use business funds? And if you do the business funds, you have to go through all that reserves for the business funds, the P&L for the customers. I'm just generalizing, right?
Mhm.
I don't want to get into very details. um, so you need to be able to use that skill set to to eliminate solutions that's not going to work. So for somebody who just can get one simple gift letter from a family member, you're not going to send that customer go through your P&L statement, letter from
Mhm.
CPA, and get all that business assets and all the documentation. You're going to look at the pain point for your customer, right? You're going to make it easier. So that's where you eliminate the need for business documents and tax, P&L statement, and business statements and all that,
Mhm.
because you never know, once you get that statement, what's going to come out of it, right? That's another problem you have to resolve. So why take that chance? So go through the one that's less riskier and move
But
forward.
The
Yeah,
path of least resistance. So
yeah,
I love it. So I ask you, how can you eliminate the over analysis? And you told me, well, you got to sit down and you got to think about it and analyze it really, which options, is the fastest and easiest, and just go for that one, right?
yeah, yeah.
So that's great. So I just want to switch back and go back into the discussion. So 2011. So you're done with the bank, right? Olympic mortgage. You've done great, right? You had a big impact in Jamaica and Woodside, and then you joined guidance. Like, how did that transition happen?
Oh no, I actually stopped doing mortgages. So 2007, no, 2008, I decided that I'm not going to be doing mortgages anymore because it involves interest, and I started to realize that what I'm involved in is something that I'm going to have to answer to my
Hmm.
creator. So I spoke with um, friends, family, and everybody, and I made a decision that I'm going to stop doing mortgages. At that time, I had 20 files. Almost half of those files, I already collected commitment fees. Back in the days, you could collect commitment fees the moment as a wholesale broker. You can issue a commitment and you can tell the customer that, okay, you owe me a commitment fee. So almost half of the customers I actually
Wow.
had commitment fees. So I called each one of those and I returned the commitment fees. I gave the file packet. I said, here you go. Please forgive me. Go and get your deal done from the next door broker. He will love to have your business. And I am giving up. So I actually gave up about $200,000 worth of approximate, um, depending on the rates, you lock and how
It's
much
probably
yield spread you would be getting. Some of the files would be 1.5% or 2%, and then upfront. So I gave up about $200,000 worth of commission, 20 files. I just made that decision. I gave, and then I went for Hajj. Came back 2009, trying to look for to do something,
something.
right? Something, right? So
Did you sign up for? Did
investment.
you sign up for Uber or no? Back
No,
in
no,
'09,
no,
there was no Uber in '09, so probably yellow cab.
no,
Yellow cab was common as well.
no, no. I was not. I actually was investing here and there, trying to invest into retail businesses, franchise, and stuff like
I
that.
see.
Some IT projects. Things did not really go well, or,
Mhm.
although all the money was gone. But I'm glad that I actually learned something through the process. Uh, Guidance contacted me 2011.
So
Uh,
3 years after, basically.
right. So I was contacted by Guidance Residential. I wasn't very convinced of the whole program. I said, it's the same riba based interest, no
How
interest,
did they
there's
how did they
nothing.
find you? Like they pull like an old list of loan officers and were just scrubbing it through, or was like an old contact somewhere?
I don't know how they how they have. That's probably their
How do they
secret.
find you?
Secret how they find the top
Guy with
performing
a
guys. I
beard,
don't
he
know.
used to do loans. Okay, he might be a good prospect.
Yeah, I was contacted by Abdus Samad Milan, who is still my supervisor. Still now, he moved up the ladder. Right now, he is a division in charge. So he contacted me. I actually gave him a runaround for like few months, 2 3 months. I actually was not convinced. I didn't even answer his voice message. It was tagged as unread. So I had intention of getting back to him, but I just did not make the decision. One fine day, he called me and he wanted to meet up with me. I decided to go drive 3 hours and meet up with him in Connecticut. And then since then, the rest is history. um, Joint Guidance Residential. But I was always doubtful, and I had a question that how can you do something in a halal way where you see that there's no other options, right? This is something very important for me to talk about is because oftentimes everybody thinks that banks are the only solution, right? And they're the only one to help you finance anytime you need money. And that's the only way is here in the United States.
Mhm.
So I wanted to understand that how can a company like Guidance do finance homes without a shadow of interest? And that led me to read a book of Mufti Taqi Usmani, a book called Introduction to Islamic Finance. B- Basic book for anybody who wants to understand how Islamic finance and economics work. Prior to Guidance, to be honest with you, I never knew that there's something called Islamic economics, or in the eye of Islam, or under the Sharia law, there are ways to transact in business. Because our knowledge, look, Islam is a complete religion, right? It's been completed, right, after the
Mhm.
after our prophet. So if it's a religion that's complete and it has the solution for everything, it's gotta be there, right? So it's there. I never had that aha moment. I never understood that because I always thought finance has to deal with, I mean, banking, the Federal Reserve, the the whole structure, the Western banking system is the one, and that's it. There is no other way to for anybody to do any financial transaction. I was wrong. After I read that book, I understood that, oh, it's not that you can deal or you cannot deal with them and there's nothing else, you cannot do anything else other than bank. It's wrong. You can actually do transactions in a proper manner where it's equitable for two parties, something that I did not realize. Because if you really look into the banking system right now, right, we're in the housing industry, we can talk about
Mhm.
housing industry to stay relevant. The bank gives you a loan for a home that you're financing. And if you are not able to make the payment, they have the right to come after your asset. Not only this home, they have the right to come after your other asset, which may be free and clear, just to recoup. It's almost like so much force, right? So much power. And if there's a natural disaster hits and there is a loss, the bank will say it's your headache and the insurance company deal with it. But why? Right? And if there is a eminent domain, the bank will say, wait, hold on. Whatever the city paid you, the check comes to me first. And if there's anything remaining, you're going to have to do a short sale, or there's a negative judgment against you, ruin your credit. By the way, the all money is mine, nothing is yours. Where do you see it's equitable if in the event of the uncertain event takes place, right? It's not there.
Yeah.
But can they offer that? Absolutely, they can, but they have to change things around, right?
So send me before we go into it, and I love this. Yeah, I'm me myself. Like I'm getting so much out of it, right? But for those viewers, before we unpack, uh, what is really the difference, right? Like we talk about Islamic financing, halal mortgages, right? Like what makes the mortgage halal, and what makes the mortgage non-halal, right? And why is that even an issue, right? If it's still money, because it's
Right.
American dollars, right? End of the day, some people say you give me American dollars, doesn't matter if it's from Semi or Peter, right? It gets in my bank, and that's it. So can you let us know a little bit more about that?
Sure. It's very simple, but first we need to understand that why interest is not good, and why interest and why usury. Look, in 17th and 18th century, right? Kings found a way to profit by dealing with usury, right? But back then, kings were known to be the protector of the Christian faith. So back then, if anybody was dealing with usury, they were the moneylenders.
And when you
And
say
if,
usury rate, you mean interest. So
yeah,
for
interest,
those
right?
viewers, yeah, we're talking about interest. So it could be money interest in your saving account or
That's
mortgage,
what I'm
right?
talking about, right?
Okay.
So usury changed the name to interest, right? So people think, oh, usury is something else and interest is another,
Mm,
right? It's not. It's all the same. So back in the days, it was shunned upon, right? If anybody was a money lender. But then they changed how the usury word changed into interest is when the kings found a way to profit out of, and that's when they said, you know what? We need to finance our wars. Their endless wars needed to be financed, and they found a way to profit out of. So they said that, it's in the king's interest to lend
mm,
money to do business with the usury. So but if they say that kings are dealing with usury, people will say, how can you be the protector of the Christian faith and deal with usury? Shame on you.
mhm,
So they said, we gotta have to change the name. So they changed it in the king's interest. So dealing with the riba or usury was in the interest of the kings because they had to. So that's how they changed the name to interest. Now,
mhm,
we now as Muslims know that dealing with interest is not permissible, is prohibited, right? So if it is prohibited, how it becomes interest? Well, it derives from lending and borrowing. So if we don't have the foundational knowledge of what's not permissible and why it's bad because if I give you $10 and you want to get $12 from me, you're gonna you're going to ask where's that $2 coming out of over a period of time, that without any transactions of value, right? A pen can be sold, bought for $1, sold for $2, because there's the pen has the intrinsic value. Money has no intrinsic value, right? Money for more money. So that's why it actually it's not equitable for two parties transacting. So because of that, interest is haram, right? It's not permissible. Now, coming to this mortgage industry, when you go to a bank, remember, the federal government tells the bank that you are in a business of banking. And what is the business of banking? Loaning money. Banks can only lend you money and you cannot do anything else. The banks cannot start a business with you. Banks cannot say, hey, John and Sammy, you guys are cool, smart dudes, let's start a business. Let's start a corporation or LLC and do business. No, they're going to say how much money you need. I'll just lend you money. That's it. You go do the business, right? So banks are there only to lend you money. So when banks are lending you money, they're only dealing with interest. So that's why dealing with banks are prohibited for those who care about their faith, right? So in mortgage, you have two elements that are not permissible. One is the lending and borrowing and deriving of interest. Second, the banks sell that promissory note to a investor. That's called selling of a debt, because the moment you and I agree on a lending and borrowing agreement, there's a debt instrument has been created.
Which,
And that
by the way, what percentage of the loans which gets originated gets sold out? Majority, probably, right?
majority right now, majority, because there are very few banks after this Fed's high
Mm.
interest. No bank wants to portfolio. There are very few, remember those ARM program, like I
On the
think last
piggyback,
year it was so big, right? ARM program. How
oh
do you
yeah,
think
the buy down, the
ARM,
3 to 1 buy down, and
yeah, the
yeah, well,
5 year, 7 year, 10 year
yeah,
ARM programs?
yeah.
What do you think these ARM programs came about? These are all from the banks, portfolios, right? And they're waiting, they're playing a 5 year plan that
Hmm.
within 5 years they're going to offload and sell it to the investor. Why? Because they are hoping that after 5 years the secondary investors rates are going to come down and then going to sell it off. But meanwhile they're making the money. So Uh, Banks are actually selling, just to answer you, majority of the notes are being sold to the secondary investor, right? So they are buying these as a debt instrument. So for a Muslim, there are two elements of Sharia is one is the interest, the other one selling of the debt. So how guidance changed this? How guidance avoided it? First of all, not being a bank. We are not a bank. We are actually a subsidy of Capital Guidance, and Capital Guidance is a Muslim-owned private equity investor. So we are a private equity investor. We invest into real estate, commercial real estate, and so on and so forth. Our sister company, Madison Market, has been involved in 16 states here for nearly 50 years now, developing commercial properties. I can give you one example that everybody knows. Here in New York, the Gateway Mall was developed by them, and then they sold it off. You can go to their website and find out about that, how much the project cost. The Washington Water Wharf project, 183 million square footage of waterfront, and the entire project was a multi-billion-dollar project, was done by Madison Market, our parent company. So Capital Guidance actually started this project of financing homes for the Muslim Americans who do not want to go to the banks, that they want to avoid riba. So we use one of the contracts. Obviously, we sought guidance from the seven of the world-renowned scholars to help us structure a proper Sharia compliant Islamic contract for our customers who wants to buy a home. So the contract is known co-ownership structure. So it's a co-ownership structure. We co-own the property. We form an LLC. Through that LLC of guidance, we become co-owner with the buyer. So let's say the buyer comes up with a 5% down payment. The 95% of the fund comes from our fund. So we finance the house, we strike a contract with our customer, and then we close on the house. There is no bank involved. So once we close on this house, now we are co-owner with the customer. We sell our stake to our investors. So we are co-owning it. So there is no promissory note. The agreement is not based on lending and borrowing. So when we sell our stake, we are not selling a debt instrument because we never created a debt instrument. So this is how we are getting rid of those two elements of interest that is prohibited, that people have problem with. Now, what kind of an agreement that we created between these two parties, that also has to go through the Sharia aspect, right? It has to be according to the Sharia. So because we are one type of a co-owner with you for temporarily, certain risk needs to be shared between us. The risk, that's not because you are choosing to get into a risk. Hey, you know what? Market is super low down. The house prices has gone down, tanked. Let's sell the property. That's not the kind of a risk we're talking about. It's by choice, right? I'm talking about the risk that's on us without our control, natural disaster risk, something that's act of God. We are going to share the risk with you, with the homeowner. The eminent domain, something that the city can decide to build something and take the property for the purpose of public interest, benefit of the public. They can buy your property for less than the mortgage balance. So what we do, we take that money, we first split between us according to our ownership. So at least the homeowner walks away with some money. With the conventional banks, they have to do a short sale, and the homeowner walks away with zero, right? Natural disaster, the bank never says, okay, here's my share, for you to fix the house. Insurance is not covering, here's the share. it doesn't happen, right? So we share these uncertain risks with the homeowner. And then in addition to that, regular bank will charge you compound interest if you're late in making payment, 5% of the monthly payment, and it compounds months after. With us, we did a research to find out that it doesn't cost more than $50 for any servicing company to remind and maintain the escrow account, to remind the homeowner that you're late in making payment, making phone calls. It doesn't cost more than $50. So we capped our late fee up to maximum 50 or whatever it cost us. So when I joined guidance, it was $22. I remember. Right now it's about $42, 12 years later. But we will never be charging a customer more than $50. So if you're late 3 months, it's $42 times 3 months.
Mm.
That's all. But it doesn't compound, right? You see? So that's a benefit. And the other benefits are foreclosure benefit. Foreclosures are, let's say if you have to foreclose the property and the house is sold for less than what's owed, the bank has the right to recoup the loss to go after other assets because the promissory note you signed off your other you
Mm-hmm.
know rights.
Yeah.
So they have the right to go other assets, college funds, retirement, school savings, and all that. They have the right to go after you whatever you own, and you have to make the bank full. We don't do that because we form an LLC, so our agreement is within the boundary of that property. So because of that, the legal LLC protects the homeowner, and we will never go after, and it's in writing. But what happens if the property is sold for higher, right? Let's say the
Yeah.
balance is 500,000, but the house is sold for 1 million.
Mm-hmm.
We will not claim anything. But typically, regular banks, I have seen being in this industry, banks will try to do what's called deed in lieu. They will tell the homeowner that deed in lieu of foreclosure, deed off the property. And once they have the deed, now they have the deed, they have the note, there you go. They have these REOs that they can sell off, right? So that's what they do, but we don't. We only claim whatever is our share that the customer when was not able to buy from us. So that's
So it just sounds like a much better, comfortable, safer product, right, than the traditional mortgage, right? In cases of natural disasters, of what if or that happens in your life, and you can afford to have the house anymore. It looks like there's better option than the traditional financing, right? Now,
absolutely.
now I know you said capital finance. It's the big daddy, right? Is this US based, or are they based in Saudi Arabia? Like, where is this company from? Like, how did they originate it?
Capital Guidance is owned by two families. They are from Syria and Lebanon.
Beautiful.
They've been around. They're in a hospitality business. They're in a development of assets, commercial
Hmm.
properties. They will package it and they will sell it off. So they actually build businesses. They've been doing this for about nearly 70 years. Dr. Mohammed Hamour is the second generation of Capital Guidance, who is the chairman of Capital Guidance. And he saw the growing need here in America. Now, remember, the sister company, Madison Marquette, has been around here in USA for nearly 50 years. So they have been involved in the commercial real estate. So they have seen the need. There are banks who are actually trying to do this ijara, murabaha, musharaka contract
Hmm.
in disguise of Islamic finance. But at the end, it's a bank who's actually doing that, right? So they uh, our company saw the growing need and they said, you know what, we need to eradicate riba, help the community get out of riba and not fall into the prey of these banks. It's something that they're trying to get out of, right?
Hmm.
So why give them a half solution? So they they decided to start this program. Took us about 3 years to get started, and involvement of the world-renowned scholars and also the 18 different law firms. How do you qualify the client? Oh, great question. We actually qualify the client based on their income. So it's the same process of income and credit. We need to make sure that the homeowner has a good credit history, that they do make payments on time. We also want to make sure that they have the ability to make payment, monthly payment. So we look into the income. And we also look into the down payments. We can do 5%. We actually have a 3% down payment as well. Something that we are excited to say that we are looking forward to this new change that Fannie has announced, that you can do 5% down payment on multifamily irrespective of HUD median income and so on. So that's something that we're excited to see, that we will look into offering similar to this program as well.
So so basically the qualifications it's similar like traditional financing when you check their debt and the income and you calculate the debt to income ratio to see up to how much they qualify for the monthly payment basically, right?
Yeah,
Okay.
yeah.
Now, can you use guidance for investments as well? If you want to buy, three for family for investment, can you also use that or is it just for primary residence?
No, you can do investment property as well.
You can do
So
investment as
yeah,
well. It's very
yeah,
nice.
you can do investment as well.
Now, what I heard, and I don't have that much experience with guidance, which probably you're gonna kick me for that. Probably I should have more experience, right? Like knowing you for so long. I've been hearing that the guidance mortgage rates or the rates in general, right? They higher than the traditional rates. Is that true or not?
It's not true. And you also want to, it's also a subjective matter, right? Because you see in the bank, if you right now go for a banking entity or a lender who is going to sell the note to Freddie Mac or Fannie Mae, they're going to offer you a Freddie Mac and Fannie Mae rate. But if you go to a local bank, they actually can offer a way lower than what the investors are offering, right? And it could be sometime even 1% difference, three quarter of a difference, half a percent difference. So it's not guidance. What it is that you need to see who is actually offering the finance. If you are going to a traditional bank and they are going to portfolio it, like previously I was talking about ARM programs,
Mhm.
they can choose to offer you because they're giving they can use the money in the fixed CD and offering the CD deposit at 1% or 1.25% interest, take that same money and give you a mortgage for 30 years, right, at 5%, 6%. They still have that margin of gap or
Mhm.
profit.
Mhm.
And after 5 years, when Freddie Mac or Fannie Mae's rate drops, they just can trade that. They just can sell it off, right? So you see how the banks are able to do something like that, right? Now, where guidance fits in, right? We are not the cheapest. We are not the highest. We are in the middle with our rates. Because at the end of the day, our non-recourse contract that I just explained,
Mhm.
this unique contract that we have, Freddie Mac and Fannie Mae decided to buy it after 3 years of back and forth with them. They decided to purchase and invest into our program. So we sell them and we are only able to offer the rate from Freddie and Fannie. Now, a customer who's comparing guidance with a local community bank definitely going to see the difference. But they don't have to take that rate. They can always buy down with points and they can take. At the end of the day, if you look at John, you've been in real estate, right? How many of your customers have sold their home, took a 30-year mortgage, but sold their home or bought into another house after 7 to 10
All
years?
of them.
Okay. So now, if you take, if right now, what is the rate? 8% now, almost, right?
Yeah,
If
seven
you
and a
do
half.
8% monthly payment for 10 years on a 30 year, after 10 years, whether you sell the house or you refinance or you buy another property, you're not really paying a 30-year worth of profit. I mean, the interest, right? That you'll be paying for the life of the loan. So if you take that amount and you divide it by the amount you finance for the duration you kept 10 years, you're going to see your actual interest rate is way less than 8%, way less. So what we try to educate our customers that yes, you look at the monthly rate, but look at your overall cost, how much is going to be. Now you want to compare apple to apple, how much is going to be based on your plan. And also, many of the times our rates are just like Chase Bank, Bank of America, Wells Fargo. Our rates are exactly identical. So almost the same. So if that's the case, can Chase Bank give you the kind of program we have? Those risk sharing
Mm.
benefits? You're getting a premium product. You're actually getting a premium product compared to what you are getting, right? Even though if it's expensive, what is it, $50 more,
Mm. Yeah, and
right?
it gives you that peace of mind knowing, God forbid something happens, I'm protected, and still you still within the Sharia, right? So now, Sim,
Correct.
I know, I'm wondering. So I was aware of that guidance, when you could use it just for primary residence back in the days, and you needed 20% down, right, and all that. So, and then you said you also do investments, and now you're gonna have, even 3% down. Do you also have like the non-QM loans, like stated programs or bank statement programs, those like semi-creative programs, or you just do the traditional full doc?
Something that we had at one time prior to me joining guidance, that's way before. It was only for a short amount of time, back in 2006 or 7, something like that. But it was very, very short amount of time. We are looking into that option right now, but it's on the table. But I won't be able to tell you anything,
Mm.
publicly that we have anything or it's coming.
We'll take it offline, the discussion, and
But maybe it, possible. But we have been very successful doing a QM
yeah,
product because we at the end of the day we are taking so much risk, right? I was talking last time you and I met at the mixer, right? There was this gentleman. He is doing the conventional, and he was talking to me. He said, "Whoa, you guys take a lot of risk." Yeah, we do. So for someone like us taking so much risk, and then on top of that doing a riskier product, non QM, it's like going back to the subprime era.
yeah.
That
It feels
you're
it feel, it
actually
feel, it
creating
feels
a
like it.
recipe. Yeah. So see, the thing is that, John, a lot of the industry, the banks and everything that I have seen so far is profit driven, right? But we always remind ourselves that we started this project not from the day one just to make profit. If that was the case, we would be offering, just like so many other guys that are coming out, car loan, equity loan. Oh, everything is
Whatever.
halal. Everything is halal. Car loan, business loan, equity loan, you name it. Just like, or go to Chase, finance your, you're getting a good rate, finance it, close it, come to me, I'll convert it into Islamic.
Yeah, yeah.
All that, right?
You heard it a lot now. The conversions, right? Like, yeah,
Yeah, so all that we have seen, these are like value neutral. You look, you, you have to understand why, right? John, why you are in the housing industry? Why am I in the housing industry, right? So Guidance Residential says why we are in this business to help the Muslim community get out of riba. And we clearly understand that everybody's not our customer. Everybody's not going to close with us. We are very clear on that. We stand by the product. We are so careful and diligent about the product. We spent so much time and effort just to do something right. There are a lot of other companies, banks actually disguise their name, create a subsidy, and they come up with Islamic name just to do business. Fine, they are doing business, whether deceiving the community or not. It's okay, right? You're in America, you have the right to do
Mhm.
whatever you want to do. But we choose not to do
Yeah.
that everybody else is doing. We want to stay true to our faith, and that's our number one value in front of us.
No, it is so good. And can you believe it? It's past 3 o'clock already.
Oh my God.
I mean,
You
we
told me
could
you're gonna
we,
keep
we,
me till
we
three.
could we could keep on going till the evening, right? And I certainly, we gotta have you back, right, where we can unpack more and go a little bit more into details. If you guys like this, you find this helpful, definitely give us the thumbs up, give us the likes, share it, with the people in the community. And if you would like Semi to come back and kind of unpack, and maybe Semi, we could go into details of each program and investment versus primary and how to qualify, what are the differences on the disclosures and closing costs and all that, to kind of really see some of the differences and benefits. If you guys would love that, just let us know in the comments below. And Semi, thank you so much for joining us and sharing your story and guiding story with us. I'm super proud knowing you, because I know the journey when guidance started and you joined them, and there was like the first thing, and you guys grow it into to really support the community and give the options, right, to Muslim families which they couldn't buy, because of riba. Now they could, they have the options. It's super important and super helpful, so I'm super grateful for you. May God reward you, and thank you so much for being here with us, man. Any
Thank you.
last words would you like to leave the viewers with before we depart?
Well, all I can say to the viewers that follow me on TikTok, IG, Facebook, or LinkedIn. I do post. I do my best to break things down. I just finished a 5 series about interest and how guidance is different.
Nice.
So go ahead and take a look at it, like it, support. So if you do support, that tells me that I should create more content about this. So
Yes.
if you have any questions, if you think that any family members or friends, they can be benefited from our program, uh, let me know, contact me. My information is out there.
Sounds good. Thank you so much, Sami, inshallah.
All right.
Keep in
All
touch,
right.
okay? Assalamu alaikum. Maybe to
Walaikum
switch you,
salam
my
wa
brother.
rahmatullah.